Well, ladies and gentlemen, moving on to the third panel discussion of the day. And the topic is SME lending firing up the Indian economy. I would first like to invite our moderator on stage, please. Mr. Ravi Virvani, Chief Business Officer, Capital India Home Loans. Let's welcome him with a huge round of applause. I would now like to invite our panelist on stage, Mr. Shekaar Subramanian, Head of Structured Finance, Private Debt, Co-Lending and Alternative Assets, Fedbank Financial Services. Mr. Amol Deherkar, Chief Product Officer, Neo Growth. Ms. Irem Sayeed, Chief Credit Officer, UGRO Capital. Mr. Nishith Maheshwari, Head Partnerships and SME Business Loans, Incred Finance. Mr. Ameet Venkeshwar, CBO LoanTap. Mr. Navin Saini, Business Head Retail SME and MSME Arka Fincap. Mr. Pankaj Gupta, Chief Business Officer, Godrej Capital. Ladies and gentlemen, let's welcome all our panelists with a huge round of applause, please. A very, very warm welcome. Ravi, sir, over to you.
Yeah, thank you. Good afternoon, everyone, and welcome to this interesting session on SME lending firing up the Indian economy. I am Ravi Virvani, Chief Business Officer at Capital India Home Loans, and I'll be moderating this experienced panel and SME experts. But before I start, I have a request from, all wonderful audience here. If you like any of the answer or the question, please don't shy away in giving a good applaud, and we'll be happy to hear any questions after that. So I would like to start this panel discussion where, I want to keep it in three parts. Hopefully, we'll try to cover everything. But the first one being, the underwriting challenges and the innovation which is coming in the SME lending space. And second is how the lenders are looking at helping or growing SMEs beyond credit. And third one, of course, what are the future drivers for SMEs for their growth. And in the last, we will have a quick, short, rapid-fire questions for some of you. So are you guys with me? I want to hear a big yes from all of you, please. Are you guys with me? Yeah, great. So let me cover, or rather uncover, by asking the underwriting innovation and the challenges in onboarding. Shekaar, let me start with you first. And there's a lot being talked about, AI coming, disrupting, everything, So I would like to specifically talk about and ask from you if there are any live use cases of AI, which you're using currently in onboarding or underwriting the customers beyond customer service, very, very specific, not generic. Yeah.
Sure. So basically, see, as a ethos, just to sum up, as the DNA of organization always has been to empower emerging India with easy access to credit. Now, when we talk about that, we obviously talk about SME and MSME lending, which is the bulk of our backbone. Now, AI is something that we have always believed that it's not a disruptor, it's an enabler. Contrary to the populist thinking that AI is going to disrupt and put things upside down, we look at it the other way around. We have built a business around AI in such a fashion that we have been the inception, right from inception, we have been talking to two tech service providers to help us not only the back end, but also on the front end also. On the front end, what we are doing is we are helping them with the grading mechanism to ensure our feet on street or the DSs or whoever they are who are sourcing the files, to ensure that there's a quick screen mechanism using AI, which takes in a lot of data and then sanitizes them and grades them as for red, amber, and green. So that saves a lot of time. So because of AI, what happens is a lot of these customers whom we don't want to lend to, or a lot of the customers that we want to lend to, are not left out. So that quick screen enables us to increase the throughput and also enables the credit team to process files faster. That's on the front end. That's a live case. On the back end, again, when it comes to the collection, which is also an equally important part, asset management. AI, we have felt that, even though it's in the beta testing module, we have felt that, it helps to grade your customers as to, in terms of priority, who's going to pay you faster and who's going to pay you for sure. A lot of times you see that whether you're an NBFC or a bank or a financial institution, a lot of time is wasted on collections on customers whom you are not able to figure out exactly whether he or she is going to pay or not. AI helps you in making that probability curve easier, where it says that, you need to focus your efforts 80% on these customers because these are more willing and more able to pay, rather than, unevenly distributing your collection efforts all over the place like a machine gun.
Yeah.
So that way it has helped us to do a lot of things on the back office as well. So these are the two live cases that we have dealt with, even though AI is evolving as we see, but I think, there's still a lot of room for improvement going forward.
Great to hear. So Naveen, Amol and Amit, I mean, all three of you, I want to ask you same thing. If you can tell us real live case which are really today using in an organization, or even if it is in like a beta stage or something.
Yeah. So first of all, thank you for the invitation. It's a fantastic event. So let's look back in what has happened in India over the last 5 years. Data is available now. You see that you have India Stack really playing out. Account aggregator is there. GST data. The digital payments have really ramped up over the last 4 or 5 years. So what that does is it gives an NBFC or a lender rich set of data to work with now, right? And now the access for the data is there. I think it's cheap. It is available at a low TAT. It is operationally efficient to get that data, and it is less hassle for the customer. So I think everything is enabling, and now it is about time to build intelligence and make use of that data. And so we do it in three major ways, right? The three broad buckets in which how we use this data is, the first one is on the customer selection bit. The second is portfolio and risk management, and the third is building an objective decision-making framework across various functions in the organization. I'll talk a bit about all three. So on the first bit, we started our scorecard journey way back in 2018, right? We started with judgmental scorecards. We saw cycles, and that has really accelerated our scorecard journey for all our customers. So 100% of the customers at Neo Growth are scored. 90% of the decisions we make on go, no-go, and exposure are only basis scorecard, no manual intervention. Right? What that has helped us achieve is that, we now have a very modular risk framework. So you can choose which risk spectrum you want to, work with. Second is you can choose the pricing, the pricing basis, the riskiness of the customer. Our TAT for decisioning is close to 1 day, right? Customer experience has been great. 40 underwriters that we have, manage 7,000 applications a month, right? So, the sales efficiency is up 2x. So these are the benefits only on the customer selection side. The second part is on the risk and portfolio management. I think one interesting use case that we have is that we have a behavioral scorecard which tells us, and we have their performance on us, off us. We have account aggregator data now started coming in. 40% of our customers have given a recurring consent to us, so that is really helpful. So that helps us do the lifetime customer value management for this customer. Also, collection is a lot more, like Shekaar said, lot more pinpointed and efficient now. So these are the things on the portfolio management side. On interesting use case on other aspects of functions. So we have a interesting scorecard called Hire Smart, which helps us hire our front-end sales folks. Essentially, we score them at the application stage, and basis that we select them. Since this scorecard was implemented, our attrition rate is down by 20%. I think that was one of the end goal that we were seeking from that scorecard. Efficiency is up. So these are some of the interesting use cases. I think it's helping us across the board on customer experience, operating efficiency, risk management, everything.
Yeah. Amit, how do you give weightage to these aspects?
Right. So for us, we have broken it into two parts. First is trying to basically avoid the friction points. When we talk about SME lending, it's not about what I want as an underwriter. It's what is available. If I can bridge this gap, it makes it easier to lend to these customers. So what we have done is broken it into two parts. One is the propensity. Identify the segment in which I want to lend and define whether this is a lendable customer for me. So it becomes easier to avoid a friction over there. What comes in is doable for me. The second is whatever alternate data is available. Basis that we have designed an AI score which throws up the risk profile of the customer and enables decision making, whether we can go ahead with this loan and at what pricing and all. This is something which is avoiding us to have friction-free loans and faster decisioning ability.
Navin, you would like to contribute to this? How is it being done at your organization?
So yeah, I first of all thanks for the invitation, and this is an amazing topic. While I feel that Indian economy is already fired up, we as a part of the lending community can only provide a catalyst. So to me, AI brings in two things very clearly. One is of course the efficiency, and second thing is removing biases. So what we are doing is that for us, two use cases which have already been powered up are that how we provide the best fit kind of a solution for our customers. Right now, if we see most of our lending products and the way they are distributed or being marketed are done through a lot of sales people, our channel partners and all that. And there is a tendency to oversell or overcommit at times. So what we have built is that there is a bot which will scrape through the entire policy framework on a real-time basis and always provide, basis certain inputs, the best fit for the customer in whose front my business manager is sitting. So that gives him the best fit and gives him a couple of solutions so that he can pitch these kind of solutions to the customer and then arrive at the best proposition for them. So that is one part which we are working on, and eventually our aim is to bring this to the customers on our website, on our app, so that the customer can choose whatever is the best fit for them. Yeah. Second thing, in order to remove biases, what we see is that the struggle always remains while you're underwriting is to see how you particularly approach a customer. If your initial impression about a customer is great, your entire tone of questioning or inquiry changes quite a bit. And if you have a very good feel, then you probably will miss out on a few aspects. So again, here we are using AI to a great extent, wherein basis certain initial information and whatever further data points which we have collected, both obvious data points like banking and bureau, but the alternate data points also where he resides and all that. There's a question bank which comes in front of the underwriter, and basis that starts deciding as to where the questioning has to be, so that we do not miss out on certain important aspects. As well, we do not become biased that, okay, fine, this is this kind of customer, I may not even ask him this kind of questions. So these are the two use cases which we have already deployed. Our wish is that we can make them available upfront for immediate underwriting for any customer who comes to our app or our website for application, so that it works beautifully and provides that efficiency and removal of bias.
Great, great. So building from here, Irem and Nishith, I want to ask you this question that, for small ticket SME loan, which is, Nishith, you have like 3-4 lakhs of average ticket size. So for a customer where not too much of data is available, how much weightage in your underwriting process you're giving to the alternate or the softer aspect of the data? For example, let's say a customer who meets all your lending criteria but has a 2.4 Google rating. Would you still give a loan to that customer, or you would deny? You can start, Irem, then we'll go to
So to answer in a nutshell to your specific question, no. But are we considering Google ratings as a softer aspect? Not right now. But are there other softer aspects considered when we are underwriting any segment of our customer? Yes. So at UGRO, we don't call ourselves a fintech. We still are a fintouch company, and that touch part is still going and meeting the customer and looking at things like who's there in the family, or where is he operating from, what kind of workplace he has. Other than that, other compliances, not only financial compliances, but if the customer is bound to give EPF, is the EPF payments on time? What is everybody is checking the amount of GST that the customer is filing. We are also checking whether the GST is filed on time or not. From other aspects also, because we are very ESG conscious as well. So we try and see, how many female employees, are there proper arrangements for those female employees or not in their premises. So these things do contribute to the longevity of his entrepreneur or his business. And since I'm in the lending business, lending lap for tenure as high as 10 years, I need to ensure that because of these, missing out on these things, the business is not going to shut down. So yes, you're right in saying that these software aspects are important. And if they're missing, we probably will not select the customer for lending.
Okay. Nishith, you do a lot of, I think, customers where this come into the play. So where do you see this?
So I think we use a lot of AI. We use a lot of AI. We use a lot of alternate data. Just to give you a perspective, we don't source a single loan from a DSA. 100% sourcing is actually AI-driven, alternate data-driven. We work with a lot of aggregators. So we work with large e-com marketplaces, restaurant aggregators, payment gateways, logistic partners. I get cash on delivery data of a D2C brand, and so on and so forth. So from a underwriting stroke sourcing perspective, it is largely data-driven in terms of the transactional data, in terms of the vintage on a particular platform, the ratings and reviews, fairly important. But ratings and reviews for us is not, it's not a decision maker in terms of whether I'll give a loan or not. But it is a decision maker because we also capture ratings on a monthly basis. So I will know what your rating is for the month of July versus June versus May versus April. Is there a declining trend? Is it similar? A lot of customers might have similar poor ratings, but they might be dealing in a mass market where they don't care about the rating. We also look at data in terms of you're selling about 5,000 orders on Amazon, and only 50 people actually came and gave you a rating. And therefore, probably your rating is poor because the segment of population which is actually giving you rating is very, very minute and does not really give a holistic picture. So in that case, we might not look at rating from an important data point, but you're selling about 200 orders and 100 people have given you a rating. The rating is very, very important. So a lot of this data gets driven into underwriting. And then there's an interesting part of underwriting, right, which is objectivity and subjectivity. So anything which is basically whether a customer is eligible, yes, no, it's all objective, it's all data-driven. Whether a customer is eligible for a 20 lakh rupee loan, that's objective. But what we've done is we've created a very good blend of giving the subjective decision-making to some of our sales managers and the frontline staff, because it could be possible that a customer is saying, hey, listen, I actually want 23 lakh rupees. And if my system has actually approved for 20 lakhs, we are okay to have some level of subjectivity because that 5,000 rupee difference in EMI is not going to really change. So I think we've got certain grids where there can be some subjective decisions in terms of pricing, in terms of tenor, in terms of the amount. But large underwriting per se is AI and data driven.
Yeah. Thank you so much. So I'm moving to a larger subject, which is how the lenders are today helping SMEs in their growth beyond the credit. So my question is specifically to Pankaj and Amol, and then any one of you can participate later. So you run programs like New Growth runs DigiBiz, Godrej you run Nirman. Which are, there are other programs which are being run to either digitize the billing, doing the inventory management, managing the social media, etc. So tell us if there are success stories behind these programs, or these are like just credit card reward points and being used just once or twice in a year. And what's been the thought process behind it?
So thanks for asking a very important question, which is relevant to us, what we are trying to do. I think Nirman, from our perspective, is purpose-driven business. We are in the business at Godrej for last now 125 years. So when we started carving out our purpose of building business, we said we want to build two large businesses in India. One is consumer finance business and second is MSME finance business. Now, because we are having multiple companies in business for ages, our thought process has been that we want to understand SMEs and MSMEs in detail, and some of the challenges, because we deal as a group with a lot of companies and supply chain ecosystems and MSMEs in general, we understand that they don't have access to not only just credit, but also in the second last or the third last presentation which was made by the gentleman here saying, what are the challenges MSME face? So giving a loan, being an NBFC and just giving a loan is very easy thing. We could have simply taken that path. And because it is a cost on us, and I am not sure that how many companies in India will take this initiative of helping MSMEs with an initiative like Nirman, where there is cost involved beyond lending. So we make money in lending, but in this initiative, we will have to spend money to help MSMEs. And this includes tie-up with Amazon for global selling. This includes Indian domestic selling, access without cost. It includes legal search, legal help and consultancy in free. It includes MSMEX tie-up, and there are many other services which we are offering to MSMEs. And our purpose is that loan is just a product, but our purpose of business is to help MSMEs. In the long run, what we want to do, we are not only doing social service. We would want to make money in the business, but we believe that because it's a lending business, where you are giving money for 20 years in some of the secured products, in some of the unsecured products, you are giving money for 5 years, and you will make money only if your money comes back. Money is going to come back if the business is going to thrive. Businesses will thrive when there is enablement to those businesses. So I think we took a very large initiative for a long term. We are here in business for last 4.5 years, in business as a group for 125 years. And the thought process is we want to be in the business for next few decades, helping MSMEs through their all-round needs, including their people needs and the services and the tie-ups which we are doing. We have as a group ability to negotiate with large partners like Amazon on behalf of MSMEs, and then providing them access to all the MSMEs through that platform, which is available to both our customers and our non-customers. So that initiative is not just for only a loan taker. Someone who doesn't want to take loan, wants to get services, it's still available to them, which depicts the intent behind it. And I'm very sure the kind of traffic we are seeing, the kind of access people are doing, and the kind of engagement we are having. So it's in few thousands. It's not 1 or 2 customer taking and then it's just a marketing thing. Actually, when the money goes out from pocket, you think, do you want to invest? And if your objective is purpose-driven, if your objective is long-term, driven with values, I think at Godrej Group we believe in that, and we are able to successfully establish this now.
Great. Amol, is there a success story where the customer has said, yes, the program has really helped me?
Absolutely. There are 150,000 users on DigiBiz platform if you want to know the number. I'll talk a bit about, the genesis of the idea. I think when COVID hit and everyone was busy collecting money, I mean, we also were collecting money, but we reached out to these customers and say, hey, what is bothering you? And one of the things that they got on most of the customers that we work with are retailers. That the world looks more digital now. How am I going to compete? Can I compete with these big e-com giants? And that is when we said that everyone wanted to digitize and they don't know how. And that was a genesis of how DigiBiz came into being. Basically, what we tried to do is we gave them an assessment tool on assess where you are in your digital journey. And digital is not just about selling online, right? It is more about how are you accepting payments digitally, operating digitally, are you doing marketing digitally, and multiple aspects. So the report shows them where they are currently, and then it shows them a roadmap and who they can work with to complete that journey. Other than DigiBiz, the other initiatives that we have is we have something called as a Neo Insight. So this is a platform that we have created for the MSME ecosystem. What we do is, with the understanding that we have of this ecosystem, we try to create studies, reports, and propagate them so that the ecosystem understands what they really need. And they have data, they become curious about the MSME needs, and they can create products and services for these. Like Pankaj said, we have aligned to UN SDG goals for sustainable development, and as part of that, we have aligned to 6 of these goals. And some of the things that we do is that we add features which are benefiting customers beyond lending. For example, everyone gives a insurance to their customers, right? Whoever is lending, we do it free of cost. 100% of our customers get a free insurance when we give them a loan. And that is a great value add. It protects them in a downturn, and it helps them manage the volatility better. So these are some of the things, but yeah.
Yeah, great. So I'm moving to a different topic now. Irem and Shekaar, this is for you. So let me understand the SME lending from the bank's lens, because you guys have been doing a lot of co-lending. So has the co-lending really picked up for SME? The banks have been appreciative of the lending practices which is followed at the NBFCs. And what's the scale or percentage of co-lending which you have in your overall book, both of you?
So, to come to that question, banks, yes, they have been warming up to the idea of co-lending. It was not the case, let's say, 10 or 15 years ago. Even then, the market was also not mature. With more and more platformization and more people coming to credit, especially new to credit customers, these were somebody which banks were shy, for obvious reasons, to touch them. So obviously, they needed another partner, a wingman, if I may use that word, to go and lend to these customers and lend to these geographies. And that's where NBFCs and fintechs had a big role to play, and they continue to do so. So in our case also, if you see, co-lending has been a key player for us. It's not just to increase the pie, it's also to enable that when we expand geographically, there are certain set of customers that the bank also wants to serve along with us. There are certain set of customers that we want to service solely. So there's a clear demarcation on that front. But what the banks require these days is to understand those customer set whom they're not able to service the way they would want to because of infrastructure, because of the credit underwriting modules that they have. That's why NBFCs like us handhold them, and we come together and share a common platform. But is it taking time? The answer is yes. Not every bank is going to warm up to the idea of co-lending immediately right from day one. Because you have a certain product, the bank has a certain product. By the time their product or your product comes to maturity, there has to be a lot of synergy between these two products. For example, if I'm doing a small ticket lab, XYZ bank may not be doing that. But slowly they're warming up to that idea of doing the small ticket lab on a testing basis, on a pilot basis, taking, let's say, 1 or 2 states going forward, which we have done in the past. So as we speak, we have a tie with 2 to 3 PSU banks who initially were a little reluctant, but now as time has progressed, almost 24 months have passed. Now we have a very good sort of relationship. We are on a great footing right now, and we are doing a lot of...
What's the percentage you have in the overall book?
It's still low, I would say. It's not... It's
10%?
Yes, it's somewhere around 10 to 15%.
How about you, Irem? How does it look? UGRO have been doing, I think co-lending has been very, very focused area for you.
So this is one of the success stories that we had. And it has changed so much. I remember in 2021, when we had just started, we were just still going through pandemic. I remember sending every file in physical form and every document requiring my physical signatures when we send it to a PSU bank especially. From there, we have now come to being fully integrated with banks. The files are getting pushed to the bank system through the integration, through APIs. We push the file, we review the file, we approve the file, we push it through the system. They are able to see it at their end, and within 24 hours, we get the decision. So it has really changed. It has come from, a situation where we were trying to adhere to their policies and try to create new products and try to tell our sourcing team that, for this particular bank, you have to source this customer, to a place where I just go out and source the customer that I want to source. And the banks have agreed to our policies, and they are very, very keen on, acquiring these customers. Especially at the senior management level, I think the idea that co-lending is the key going forward is very prevalent now. It's only, it takes a little bit of time for them to gain confidence on their partners, but it has become a lot easier over the 2 years.
So what's the percentage you have?
So we are actually at 40%. So our 40% of our AUM is either co-lent or co-originated. And this is only in last 2 years. We've been in business for 5.5 years. So over the last 2 years, this is what we've been able to do. And slowly, I think it's going to increase.
Just to add and reiterate, co-lending again is you have CLM1 and CLM2. These are 2 different models, right? One is on closed platform and the other one is back-to-back arrangement. We are working on both the fronts. I'm leaving out securitization out of this because that's a separate subject. So obviously,
Absolutely fine. So I think we have a very short time. I had a couple of more questions, but I don't think I'll be able to take it. But I'm definitely going to do a fireside chat where, I would be asking each one of you 2 questions, and this has to be really fast. and you have to answer in one word. So we'll start with you and then, move ahead. You have the mic ready? Yeah. So what comes to your mind when you hear the word SME?
Great determination and willpower.
Great. And what do you think SME wants? More money or more customers?
I think they want understanding and empathy, if you ask me.
Yeah. Define lending in 3 words.
Getting back money on time.
Okay. What was your last search on Google?
World Bank.
Okay. What's more complicated, underwriting or collections?
Both.
Both? Okay. Okay. What would you prefer from a borrower, capacity or the collateral?
Capacity.
Right. Over to you, Irem. You think the Geo movement has arrived in financial services too? Yes or no?
I'm sorry, I didn't get the question again.
Do you think that the Geo movement has arrived in financial services too? Yes or no?
Not yet.
Okay. And what comes to your mind when you hear the word AI?
Future?
Okay. What percentage of your total acquisition happens digitally? Though you already answered, but I still want to ask you this.
100%.
Yeah. Do you spend more time with top performers or underperformers?
I think top performers.
Yeah. Okay. Over to you. Full form of UPI.
Unified Payment Interface.
Okay. Full form of API. Yeah, we'll give a pass. Pankaj, over to you. Which sector you think will lead India's growth for next 5 years?
I think financial services will lead India for next 5 years.
And last question, what would you prefer? What is your total phone screen time in a day?
3 to 4 hours.
Thank you so much. I think this has been very interesting and sharing wonderful insights, giving us future possibilities. We will have a couple of questions which we will be able to take in 1 minute's time. If any one of you want to ask to a specific person any question, we'll be able to take it. Over to you guys. Anyone want to ask? Yes, sir. Can we have the mic there, please?
This is Vijay here. In terms of SME lending, do you see the pace or the percentage or the volumes more in Tier 3 rather than the metros, not even Tier 2? I mean, anyone?
Do you want to answer?
Yeah. I think going forward, that's going to be the trend because, the economy is growing. Obviously, they'll be lending in Tier 1 also. But looking at the pyramid and looking at the profile, the customers, the new to credit customers who are evolving, the bunch is going to increase in Tier 3 from our perspective. I think that's where the growth will be going forward in terms of volume. Yeah.
Right? You want to also answer?
Yeah, so I think I will just add to what Shekaar said that the India growth story is definitely happening out there. And with the penetration of internet and other things, the awareness has also grown fast. So I think the next wave of growth has to be in not only Tier 3, 4, 5 also, for sure.
Thank you.
Thank you everyone. I think we hope you enjoyed the session, and in case you have more discussion, you want to catch us, at the lunchtime, maybe near the dessert counter or somewhere. Yeah. Thank you.
Well, thank you for such an insightful discussion. Can I please request you to remain on stage for a few more moments? And now to felicitate our wonderful panelists, I would like to invite on stage Mr. Manoj Agarwal. Ladies and gentlemen, let's have a huge round of applause for all our wonderful panelists. Once again, thank you so much for taking out time from your busy schedules and being here with us. Can we please have a group picture?